Now, we discussed these two aspects in these two stocks yesterday, but that was yesterday afternoon. Well, for someone who missed that conversation, let's talk about the importance of this variance. Both Growth Finance and Bajaj Finance are trading way above the consensus price target. What does that mean?
Well, it means that currently the analysts who are tracking the stock are finding it difficult to justify a higher valuation based on the normal valuation parameters that you are looking at. And there are investors who are looking at, I think, probably a longer time frame and who are willing to pay a much higher valuations. So the market is actually telling you that no matter what the valuations that the consensus or analysts are working with, they are willing to pay a much higher price, particularly the long-term investors who are looking at a 2 to 3 year kind of a view, because for Group Finance in particular, and even to some extent for Bajaj Finance, these valuations have not been just like last 6 months or 12 months. This have been the valuation that the market is willing to pay for last 2 to 3 years. So there are certain more companies also, Nikunj, like iShares or HDFC Limited, where you are seeing this kind of premium valuations, and market is actually willing to reward these kind of companies because they have also given a good amount of wealth creation over a period of time, despite being trading at a much higher PE multiple or price to adjusted book multiple.
Let's also talk about Tata Steel. Numbers are expected today. Do you think there is money to be made ahead of numbers from Tata Steel? Because yesterday we got numbers from Jindal Hisar, and those numbers were absolutely blowout.
Well, not sure whether there is money to be made ahead of the numbers, Nikunj, but the expectations of the numbers are pretty good. You're looking at a very strong 18% volume growth. EBITDA per ton also should see improvement. Also, most importantly, the kind of new data points or developments which are coming up in terms of the this new Chinese project, where the total investment would be about $68 billion. So in an environment where you are seeing these kind of data points with some stability in the global markets, the outlook on the metal will remain good. And most importantly, for many of the metal companies in India, we are looking at a very strong volume growth, be it ferrous or non-ferrous side. So with some stability in the price, you can expect good operating leverage kicking in. So overall outlook for metal companies, though you will see bit of corrections here and there, would remain quite positive.
The stocks which are going to be in focus today are REC as well as SBI. And Hemang, interesting to note that REC gets included in the MSCI Global Index now, and SBI CLSA has added it to its India model portfolio and added the weightage by 3 percentage points. First, let's pick up the point on SBI, because they believe this NPA policy is bound to benefit the PSBs more, and larger ones like SBI would stand to benefit. Would you agree with that thesis?
I definitely think so. I think the recent steps which have been taken would have some positive rub-off on the particularly PSU banks and some of the larger private sector banks, because they are the ones which are struggling on the NPL front. Also importantly, we reckon that the 10-year bond yields in the last 2 or 3 days have actually corrected quite sharply, more than 1%, about 10 to 11 basis points. So that is also adding the sentiment for some of the PSU banks, and particularly for SBI, which is way ahead of the curve in terms of recognition, in terms of provisioning, and where we are seeing a decent increase in the credit growth also. So I think the overall bias for SBI continues to be positive.
Well, Hemang, not just SBI, but ICICI Bank as well is something wherein the weightage increase is going to lead to $200 million worth of inflows. At least that is what the Morgan Stanley estimates are penciling in. What is your take on how ICICI Bank should be approached?
I think definitely it would have some positive impact, but we have to remember that for the large cap banks where the liquidity is ample, the impact may not be that huge. But for somebody like a IOC or a Grasim or a Petronet, where the free float is already less and the liquidity in the market is less, the impact could be higher. Also, we have to reckon that it's not as if that the market has got to know about these names only today. These names were there for a while, and to some extent the the price adjustment would have already happened. So one should not really initiate fresh trades only on the basis of this. That's what I definitely think.
And Hemang, this is an interesting one, right? The last 3-year performance, the last 1-year performance, or yesterday's performance. Whichever way you want to look at it, this stock has been really, a value buy, so to speak. But what about those who've missed out on the rally, or those who are already wondering what to do with the profits that they're sitting on?
Well, I have not looked at this company in detail, Aisha, but definitely what is coming out very clearly is that, about 48% of the revenue is coming from pharma, and the way the management has gone about investing in the lending business, investing in some of the NBFCs has been quite commendable. Particularly these two areas, they have been able to demonstrate a huge growth opportunity and huge value creation for shareholders. And the phase at which both these businesses are, the market is looking at 30-35% kind of a compounded annual growth. So I think it's the value that the market is willing to give to the management for its ability to move into the right businesses at the right time. But I have not looked at the details of the numbers, so I won't be able to give out a specific reco here.
Let's get a investment idea going from you.
Yeah, Nikunj, we have recently rolled out an idea on Sadbhav Engineering, which is essentially, a road developer with, some other, asset creation models also on the, hybrid annuity side. And the company has a stake in a road development subsidiary, Sadbhav Infrastructure, which has completed almost about 11 projects out of 12. So you will see some kind of an improvement in their cash flows going ahead. And we believe that the way the entire road sector has seen the awarding of order part, we are seeing a huge growth of almost about 54% on a YY basis, with a target of almost about 25,000 kilometers. So some of these road developers are extremely well placed, particularly the ones which have managed their balance sheets in a good way. So I think Sadbhav is one of such companies, and we are betting on it with a 20-22% kind of an upside from a 1-year perspective.
Closing comments from you. We've discussed Sadbhav Engineering. Anything else where you think 20% upside is coming in next 6 months?
Yeah, in fact, today only, Nikunj, we have rolled out a viewpoint on GIC housing. This entire, focus of the government on housing for all, is a big theme. And we think that some of the housing finance companies, though they have run up big time in the last, let's say, 1 year or so, some of them still offer value. Particularly GIC Housing Finance is quoting at about 40% below some of the other housing finance companies, primarily because of the, asset quality, which is not that great. They have a gross NPLs of about 2.7%. And, I think the new management has taken over, and we expect about, 18-20% kind of a growth in the disbursement, and with a reasonably good asset quality. The company has not really expanded big time in the last about 2-3 years. So now the company is in an expansion mode. So this is something that we like within the housing finance bouquet, and we are looking at another 18-20% kind of an uptick there.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.